I was tired of overcomplicating my investments. Endless YouTube rabbit holes, so-called experts shouting conflicting advice, and flashy thumbnails promising millionaire shortcuts. It all left me more confused than confident. So I did something radically simple. I built a portfolio using just 3 assets. That's it. No day trading, no exotic ETFs, no meme stocks, just a balanced mix of stocks, bonds, and a touch of gold. I let it run for 90 days straight. No interference, no adjustments. And what happened shocked me. But before I break it all down, make sure to subscribe, because this is just the beginning of my no BS journey through real-world investing. And trust me, what this portfolio taught me about money, patience, and peace of mind might surprise you even more than the returns. Stick around, especially if you think investing has to be complicated to work, because by the end of this video, you'll have seen what 90 days of simple investing can really do. And spoiler, I'm not going back to my old strategy. Now let me show you exactly what this 3-asset portfolio was, and why it might be the last setup you ever need. So what exactly is a 3-asset portfolio? And why are so many seasoned investors quietly embracing it? At its core, it's a minimalist investment strategy designed to balance growth, stability, and protection against the unexpected. No overthinking, no need to constantly rebalance or track dozens of tickers. In my case, I chose a classic combination U.S. total market stocks for long-term growth, government bonds for stability, and gold for a hedge against inflation and market chaos. Think of it like a well-balanced meal: protein, carbs, and a little fat. You don't need 10 different side dishes to feel full. What's powerful about this strategy is its simplicity. It takes emotion out of the equation. Legendary investors like John Bogle and Ray Dalio have advocated for simplicity for decades. And honestly, I wanted something I could set and forget, but still sleep at night knowing I was diversified. Whether you're a beginner or burned out by complexity, this setup offers a grounded, no-fuss way to grow your money. But what did I actually choose for each piece of the puzzle? And why? In the next section, I'll break down the exact assets I picked and the logic behind every single one. Here's exactly how I built the portfolio, and more importantly, why. I went with 60% VTI, which tracks the entire US stock market. Why VTI? Because it gives me instant exposure to thousands of companies without betting on a single stock. It's diversified, low-cost, and historically delivers solid returns over time. Then, I allocated 30% to BND, a total bond market ETF. This adds stability. Bonds may not be flashy, but when stocks dip, bonds often soften the blow. And finally, I placed 10% in GLD, which tracks the price of gold. I added gold not to get rich, but to protect against inflation currency issues or unpredictable market shocks. Some might argue for REITs or even crypto, but for this test, I wanted to keep it traditional. Each asset had a job: VTI to grow BND, to stabilize GLD, to protect. Together, they formed a trio designed to ride the market's ups and downs without too much drama. This wasn't about maximizing returns. It was about reducing stress and creating consistency. But building the portfolio was just the first step. What really mattered was how it would hold up in the real world, and that's exactly what I'll share next. The next 90 days turned into one of the most eye-opening financial experiments I've ever done. I didn't touch the portfolio once after setting it up. No rebalancing, no panic selling, just pure observation. And honestly, it was weird at first. I was so used to checking my investments every morning that letting go felt unnatural. Week 1 was calm, but by week 2, the market took a hit. Stocks dipped hard. I was tempted, so tempted, to adjust my holdings, maybe shift some weight into bonds, or even cash out my gold. But I didn't. I stayed the course. By week 4, things recovered a bit, and the portfolio showed a small gain. I started noticing something. I wasn't stressing. No matter what the headline said, inflation spikes, Fed rumors, tech layoffs, I felt grounded. The simplicity of just 3 assets made it easier to focus on the big picture. I wasn't reacting, I was observing. And through the ups and downs, I saw how each asset played its role. It was like watching gears in a clock. Different speeds, different purposes, but working together. But what about the actual numbers? The performance? Let's talk results. After the 90-day test, it was time to face the numbers, and they told a story I wasn't expecting. VTI, my total stock market ETF, ended the period with a modest gain of about 4.2%. Not mind-blowing, but consistent. Meanwhile, BND, the bond ETF, delivered a quiet but steady 1.1% return. Nothing flashy, but in the middle of market volatility, that small gain felt like a safety net. Then came GLD. Gold was the wild card. VTI, my total stock market ETF, ended the period with a modest gain of about 4.2%. Not mind-blowing, but consistent. Meanwhile, BND, the bond ETF, delivered a quiet but steady 1.1% return. Nothing flashy, but in the middle of market volatility, that small gain felt like a safety net. Then came GLD. Gold was the wild card. During a couple of shaky weeks, it spiked, then settled, and by the end of the 90 days, it was up around 3.4%. Combined, the full portfolio brought in an overall return of roughly 3.2%. And while that might not impress a crypto bro, it was earned without stress, without checking charts, and without any second guessing. Even more interesting, on 2 separate occasions when the S&P 500 dipped sharply, my portfolio stayed relatively stable. The mix worked. It did exactly what it was designed to do: balance, growth, and protection. I even plotted the numbers in a simple Excel chart, and the smooth curve compared to the jagged S&P line told me one thing: peace of mind has value too. But that wasn't the only lesson. Looking back, the returns were decent, but the real value was what I learned. First, I realized how powerful simplicity is. I didn't waste time stressing over headlines or market noise. The portfolio worked in silence, and I lived my life. Second, I learned to trust the process. In the beginning, it was hard to stay still, but discipline paid off. First, I realized how powerful simplicity is. I didn't waste time stressing over headlines or market noise. The portfolio worked in silence, and I lived my life. Second, I learned to trust the process. In the beginning, it was hard to stay still, but discipline paid off. I saw firsthand how emotions are often the biggest threat to an investor's success. And if I were to do it all over again, honestly, I might tweak one thing: swap gold for REITs. Real estate brings steady income and can still act as a hedge, maybe even better in some cases. But overall, this experience changed how I think about investing. I'm no longer chasing the next hot stock. I'm chasing peace, stability, and long-term growth. And that's something no chart or algorithm can fully predict. Want my advice? Start simple. Understand why you're investing, not just where. Because once that mindset clicks, everything else becomes easier. And if you're wondering what I'm going to test next, well, let's just say I'm not done experimenting. So what did 90 days with a 3-asset portfolio really teach me? It didn't make me rich overnight, but it gave me something way more valuable: clarity. I wasn't glued to my screen. I wasn't guessing what the market would do next. I had a plan, and it worked. And now I'm taking that lesson forward. Simple doesn't mean weak. Sometimes it's the simplest strategies that give us the strongest results. It didn't make me rich overnight, but it gave me something way more valuable: clarity. I wasn't glued to my screen. I wasn't guessing what the market would do next. I had a plan, and it worked. And now, I'm taking that lesson forward. Simple doesn't mean weak. Sometimes it's the simplest strategies that give us the strongest results. If you're still here, chances are you're looking for a smarter, calmer way to invest. So here's the deal. I'm testing another strategy next. It's bolder, riskier, and possibly smarter. If you're curious to see what happens, make sure to hit that subscribe button right now. You don't want to miss it. I'll be dropping that video soon. And trust me, if you thought this one was eye-opening, the next one might change how you invest forever. Until then, stay focused, stay calm, and remember, it's not about timing the market, it's about time in the market.